All right, guys, back to work. Fantastic job today. That double bottom winner strikes again. Hope you guys made some money out there today. And we're back to work tonight. We get some big NVIDIA earnings coming out tomorrow afternoon. I got a ton of traps on my radar for tomorrow. The way the charts look right now, it looks like traps are where the money is made tomorrow. I got some bull traps. I got some bear traps. It might be an all-you-can-eat trap buffet on Wednesday morning. All kidding aside, though, I have a number of great trades I'm tracking for tomorrow. A bunch of traps on my radar. We're going to cover all the entries, all the exits. By the time we're done tonight, there'll be an easy roadmap to make some money before the NVIDIA earnings come out tomorrow afternoon. Now, before we jump in, though, and talk my favorite trades for tomorrow, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you enjoy these videos, if you like these lessons, hit that like button for me, will you? Give me a shout out. Give me a hell yeah down in the comments section below. Thank you so much for tuning in, supporting our channel. Now, enough of the intro. Let's go make some more money on NVIDIA earnings Wednesday. That trap buffet sounds pretty good, doesn't it? Anyways, all kidding aside, though, charts are all ready to go here. NASDAQ and triple Qs are ready. The E-mini and the SPY is ready. I have four pretty important clues right now on these charts tonight that are telling us where the winning trades are going to be for tomorrow. One of those clues is right in front of us here on these 60-minute charts. It's easy to see the S&P and SPY is bullish. The NASDAQ triple Qs are bullish. I like to use the 60-minute chart to give me that overall direction. We know what direction the odds are stacked in our favor. But the one thing the 60-minute chart does not tell us is entry timing. Direction is the easy part, right? The entry timing, that's the hard part. I have three more important clues tonight. We'll drill down to some faster time frames, some tick charts here, and we'll cover those three more clues, and that will unlock where the best entries are for tomorrow. But before we do that, though, let's check our schedule for tomorrow, because tomorrow it's not your average Wednesday. I have three things on my radar tomorrow. One is the home sales number at 10 o'clock Eastern Time. Two is the FOMC minutes at 2 p.m. Eastern Time. And of course, unless you've been living under a rock the past couple days, we know tomorrow evening after the close is the NVIDIA earnings, kind of the last little drop of earnings season that ended a few weeks ago. So home sales, of course, anytime we have big news at 10 o'clock Eastern Time, you better be paying attention. The FOMC minutes, I don't think that's going to be the big deal for tomorrow. The NVIDIA earnings are definitely going to be something that everyone is watching tomorrow. That means tomorrow is a little bit like a Friday. You know, early in, remove risk early, take profit early, leave some runners. But just be aware, we're going to probably see some shenanigans in the markets tomorrow afternoon ahead of those NVIDIA earnings. So be careful if you're trading after 1:30, 2 o'clock tomorrow afternoon. Of course, we'll be in there trading tomorrow morning at 8 o'clock Eastern Time. So definitely home sales, definitely NVIDIA earnings. I don't think FOMC minutes are going to tell us too much because those are a bit outdated now ever since we saw the CPI and the PPI report come out after that previous FOMC announcement. Anyways, though, back to our charts, though. We know what our news is for tomorrow. Now, let's cover my favorite trades here for tomorrow. We talked earlier about the directional bias here on the higher time frames. Let's go S&P SPY first. We'll wrap things up with the NASDAQ triple Qs. Be aware, the S&P and the NASDAQ are very, very similar. So pretty much interchangeable. We know we're bullish overall right now on the 60-minute. You don't need me to tell you that, right? The hard part are the entry tactics. Now, as always, upper left-hand corner, this is a 7,000 tick chart. And in case you're watching for the first time right now, this is the 21 EMA. First important clue here right now on the tick charts is the bull move up into that trading range. We talked about this last night on the video. We know that ranges do two things, right? They act like magnets and they love to rotate. Right now, that bullish range is trying to complete that rotation and complete we call the pendulum swing in our free video classes and of course in our trade room. Bull market up into a trading range, grab that beautiful double bottom reversal we talked about last night. We're trying to squeeze the sucker up, that 53.63 area overhead. One very important clue. Second clue here right now on the tick charts is this trading range. We spent quite a bit of time overnight last night in that range. Again, ranges love to rotate, and when they break out, what do? They love to break out pullback. Keep that on your radar as well. And the third clue, and possibly the most important clue here on this S&P chart right now, is we have just a huge amount of overhead resistance at 53.49. We had that big run up, of course, middle last week, and that clearly is acting as major resistance. It's easy to see why. We got big NVIDIA earnings coming out tomorrow, so it's easy to see why markets are not pushing up very easily to that high. Now, put that all together. We know this range wants to break out and run higher. We know this range wants to break out and pull back, but I'm dealing with that overhead resistance. So in this situation right now, I've got three different breakout trades going higher here. Those are kind of the easy one, to be honest with you. But I'll tell you, the better money right now tomorrow is probably made on the pullback. The pullback is a little bit more challenging, so why don't we start first on the pullback? This is where we want to be. We want to buy nice and low right now and get that rotation going higher. Let's talk about first the pullback here, and then later on in the video, we'll talk about those breakout trades going higher, because again, those are pretty easy. We'll cover that, of course, on the NASDAQ. So as we go lower, I want to buy the breakout pullback off this trading range right now. The challenge, though, is I have all of that overhead resistance, right? Not a real, well, put it this way. If I buy right here, I'm buying relatively high. And so whenever I want to buy relatively high, there's one entry pattern we always look for, and it's going to be a bear trap. Bear traps are always going to be the entry pattern I use whenever I try to buy relatively high in the top of that trading range. Now, bear traps are very simple. Bears try once, bears try twice. It's going to be a higher high in price, a move right below that low. Again, it's called bear traps. We teach, of course, a lot of this inside the free video classes. Now, this may turn into a bear trap into another bear trap. So just be aware of that. These may parlay into back-to-back bear traps. These are affecting the same exact pattern. And again, all I'm doing is bears once, bears twice, buying as low as I possibly can, because again, trying to get that rotation, but also not trying to get caught buying into that high. Again, it's a bear trap number one. As it goes higher, it's another same pattern. They just look a bit different because one of them is on a pullback and one of them is going higher. So bear traps on shallow pullbacks. Now, let's face it, right? Because with this area of resistance overhead, we may wind up going all the way back down. For example, right? If I take this range right here and take that pendulum swing, that symmetry, there's a ton of support down here. This is really where I'd love to buy tomorrow, right? This is where I'd love to buy tomorrow. So if we can get that run going lower, I'd love to buy some bear traps down here as well. Now here's a question though. How could I sell that pullback? Could I short that pullback? Yes, you definitely can. There are two different types of bull trap patterns. I told you lots of traps on the charts tonight. Two bull trap patterns I can look for. One is called a crown reversal. It's very simple. If we start seeing buyers come in and start trying once to push right into this overhead resistance, I know we're bullish, but this is not a great spot to be buying, right? So if we get some rookies in here, buying once, buying twice, if I can get that nice strong red candle closing underneath that moving average, this we call, it's a bull trap pattern. It's basically buyers once, buyers twice. Now think about this. All of their stops are sitting right below that low. Trap those buyers in, run those stops on the way back down again. That's one way to short this on the way down. Another way to do it is oftentimes we'll go up, slam off that high, and begin to grind going lower. The grind is always the giveaway, isn't it, right? We mark off that low, we pin up around the high, that gives me the channel I need. Now we look left, we find that prior swing, and we grab that, again, a bull trap off of that high. So again, I'd like to buy down here, and if on the move going lower, I'm going to look for that bull trap pattern off the high of that kind of pop and grind, or that V-top reversal, we call it, in our trade room. Now, if we find our way down around these lows now, this is where the magic really happens here for the buyers. If I can get all the way down to those lows, now, again, think about it, that range right there, the amount above, the amount below, we know ranges love to rotate, so lots of support down there. The problem, though, is if I go all the way down like that, I know we're pretty bullish overall, well, but that momentum is very, very bearish. So I'm not going to pick a bottom on this. I'm not going to blindly buy down there. What I'll do is I'm going to use one of those classic failure patterns. Let the bears try once, let the bears try twice. This is not a great place to be a seller. We're an overall bull market, nice and low now, not worried about buying too high anymore. All I'm worried about now is that momentum. Trap the bears in, use their stops. Think about that. Once those bears are in, use those stops as fuel to move that run higher. And as it runs higher, think about that bear trap pattern once again, that higher high in price and that move right below that low. Remember, think about ranges, how they like to rotate, down, up, want to go back up and take out that high. So think about that failure into a bear trap combination. And remember, a lot of times we'll get that run lower, we'll get that failure pattern, right, going higher, it'll pop up, but for whatever reason, there's so much momentum going lower, they'll hold the underbelly here, they'll go back and retest that low. These double bottoms, think about how well that double bottom 1-2 reversed this morning, right? Think about how well that squeeze off that low worked this morning. Let's do it again tomorrow. Why not? Rinse and repeat. Trap those bears in. And again, think about now, 1, 2, do it again. Failure. And then what was the pattern again? It's always going to be that bear traps on the way higher. So think about that failure and that bear trap combination. Remember, a double bottom is not a reversal in an overall bull market. It's a beautiful way to buy some more and make some more money. Now, let's slow down for a second because I know a bunch of you guys made some great bank today on that double bottom squeeze off of that low. But if you're watching for the first time right now, this might be a brand new language for you. I look at charts a bit differently than a lot of YouTubers do. I understand that. So if you're here for the first time right now and you want to learn more, I teach all these entry patterns. I have hundreds of examples of failures, lots of trap charts examples. I teach all of this in our free video classes. I'll put a link up top there for you. Don't you worry. Upper right-hand corner, grab that link that popped up there and take that free trading course because the strategy I teach in that video series will teach you a stupidly simple trick we use in our members trade room to know exactly where the best winning trades are going to be every morning. Most importantly, though, I want to help you start making money on your own out there. I'm going to teach you 4 of my favorite entry patterns. You'll learn traps for sure, failures, pullback combinations, the entire thing. I teach the entire strategy in that short video series. Guys, the markets are way too good right now. If you're not making consistent money every day, if you're still missing the best entries and exits, if you're struggling to qualify for a funded account at Apex or TopStep, hit the link up top there. Take that free course. It'll give you an easy roadmap. You'll always know where the winning trades are going to be each day. Also, too, I'm going to put all the important links tonight in the description of the YouTube video. Put the free class links down there for sure. So definitely start there. We trade together every day in our trade room, 8 o'clock Eastern time. I'll put all those links in the description of the YouTube video. And also, too, I post a lot of charts and updates on Twitter or X throughout the day. If you're on X or Twitter, give me a follow. All the details, description of that YouTube video. But make sure, whatever you do, though, if you're here for the first time right now, take that free video course because, again, it is perfect for someone who wants to make a full-time run into day trading. So, we talked about now, again, that shallow pullback. I don't want to buy high. I want to buy that bear trap entry. And again, later on in the video, we'll cover if we go higher. We talked about as we go lower, looking for those bull traps, right? Going lower. We talked about that move down, that 1-2 squeeze back up, right? Or that double bottom squeeze back up that we saw this morning in our trade room. One final thing. If we end up all the way down there again, there might be so many buyers down there, we may not get the 1-2 back up again. It may simply just boing right up off that low. It does happen. It does happen. Oftentimes what happens is when a market makes a strong run off the low, all you do is connect off the highs, bring it down off that low, and buy that first pullback, right? See how I do that? Off the highs, down to that low, and buy that first pullback. So think about that now. If we run off that low and boing right back up again, think about now how you can find a new channel by drawing right off those highs, like over here, bring it down to that low, like over there, right? And then all you do is wait for that pullback. Now, my favorite trade is always a bear trap or a trap below. We call these trap patterns, right? They're below a prior swing around the low of that channel. I love traps, but you know what? Sometimes we don't get traps like over here, right? There was no swing to use over there. So what do? You get underneath the moving average. You trap the bears in, get the bears getting short. It's not a bear market, it's a bull market overall, and use that failure into pullback combination. Now, I'm not making this stuff up. You can see it right here, right? We pull back, there's that failure, and then there's your pullback combination. This will all make a lot more sense, by the way, once you get into that free video course. We call this the price action cycle, right? So failure into pullback combo, failure into pullback combo. This stuff happens over and over and over again. So that is my game plan as we go lower. As you can see, a lot of traps. Got some bull traps and a whole lot of bear traps. Now let's talk about going higher. This is kind of the easier one. It's kind of the easier one, right? The harder one, it's always more pain, more gain, right? It's always more pain, more gain. This is a much more difficult trade to structure. These are much more difficult trades there because you have to respect momentum and location. But those are the ones that have the more potential to make us a big paycheck tomorrow before the NVIDIA earnings. Now, let's go to the NASDAQ here. NASDAQ's getting lonely over here. I see you, NQ. Let's go to the NASDAQ now. NASDAQ, overall bullish. You can see that already. That's pretty obvious. Let's go to the tick charts now. A 4,000 tick chart on the NASDAQ. We don't trade time charts in our trade room because tick charts makes everything so much easier. All right. So do yourself a favor. Get yourself some tick charts. They will make everything so much easier. These are from NinjaTrader. I have no affiliation with them, but they do the best by far charting software, execution software, commissions, and margins. Now, on the NASDAQ is a little bit more straightforward. The NASDAQ is almost exactly what we talked about last night. Big bull move up into a trading range. We talked about last night how the amount above the range, the amount below the range becomes a key area of support. We talked about how we don't pick the bottom. What do? We trap them in, right? We wait for that price to pull back once, twice, and we squeeze those stops up. Remember that failure? Into that bear trap combination? Is this not just a beautiful example? A whole bunch of guys made some really good profit off that. That's that failure into that bear trap combo. Again, we talked about this last night, 24 hours ago. Exactly what played out here for today. Every once in a while, we get this stuff right on these video newsletters. All kidding aside, though, now the rotation now is completed almost. Right now, the amount below the range is the amount above the range. So it's different than the S&P is right now, but it's very similar, right? Very similar. We know we're bullish. We know that this range is ripe for a breakout pullback, right? We know that breakout pullback is potential, but we also know we're running right into triangle support, pendulum swing support. So buying that pullback, it's not a gamble. It's just we have to structure it best with, what was it again? It has to be a bear trap, right? We have to buy as low as we can. We're going to make sure we trap those bears. And this is a great example of where you need to use those stops, right? You have to use this bear trap pattern. Again, let the bears once, bears twice. Use that bear trap pattern to buy as low as you can and squeeze those stops, right? Because the stop losses are the fuel you need to punch through that high. A great example here of a very important area where traps are part of the game. And just like on the S&P, this may get whacked all the way back down again, especially with the NVIDIA earnings tomorrow. With NVIDIA tomorrow afternoon, it should not surprise anybody if we see a big drop, right? A big risk off, people taking chips off the table, had that big earnings report. If this thing starts running lower and buyers get trapped in here with a bull trap, crown reversal, or a lot of times what happens is it'll punch up and then get whacked back down again and begin to grind going lower, right? Mark off that low, mark off that high, right? Look left and find that first test off of that low. All this is the same as we talked about, of course, on the S&P. And again, we find our way down, right? We don't pick the bottoms, right? We 1, 2, failure into that. What was it again? A bear trap combination, the exact same failure and combo pattern that you guys did so well with here for today. Again, double bottom, don't be surprised. Double bottom is not a reversal. Okay, so same basic idea there, kind of copy and paste the strategy from the S&P. Now, as we go higher here, as we go higher here, I want you to think about now this kind of key sequence. First of all, is as we go higher, I always look to buy as low as I can on a breakout like this, which means I want to buy a trap. Traps are always going to be the pattern I use to buy low, right? It's a higher high in price and a move right below that low. Trap pattern. Now, remember, when it comes to range breakouts, the size of the breakout leg is used as a measuring leg, okay? So I don't have a crystal ball. I can't tell you how big it will be right now, but the idea is very simple. The size of that breakout leg, I'll then project off that trap low, and that becomes my kind of target up there, all right? Just be aware of that. These are measured move breakouts. One of the easiest ways to use measured moves, most consistent way to use a measured move, is with a range breakout. So that will tell us where to take profit, also where to stop buying now. All of this overhead resistance over here now becomes a key area of support. So let's get rid of this now. We'll put this up there, right? Now this becomes, really this whole area now, right, becomes a key area of support now. So now we get that nice strong run higher. We get that bear trap on the way, right, on the way up, measured move, yada, yada, yada. We talked about that already. Now, we don't buy high. We now look back and go, okay, I see you over here. I see you where that prior high is right there. Now we wait for a deep pullback. Now, whenever I say deep pullback, you want to think about a two-legged pullback. What's a two-legged pullback? A two-legged pullback is get under the moving average, pull back, and a little bit more than a measured move, okay? In the free video course, and again, by the way, if you've not taken that free video course right now, what are you waiting for? Pause the video, hit the link up top there, take that free video course. You will thank me 2 weeks from now when you're finally getting consistency and confidence back in your trading. One leg, two leg, a bit more, again, a bit more than a measured move, all right? Again, I don't know how big that first leg will be, so bear with me on this, but that is the structure of when I want to buy low, I want to buy that nice deep pullback. I think about a two-legged pullback. Now, like everything, we don't pick the bottom, right? Stop going all or nothing on this stuff, right? Stop picking tops and picking bottoms. We know where the area is. Don't pick the bottom on that. Wait for the pullback. Because guys, for all I know, we're going to keep on rolling down, right? For all I know, it'll start grinding down like that, back into that trading range. And if it does, you know how to trade this, right? If it grinds down off that low, off that high, short that first test. All right. Again, do not be surprised tomorrow on the S&P and NASDAQ if we go up and then all of a sudden the rug gets pulled up from underneath us because, again, we have one of the biggest earnings reports of the first quarter coming out tomorrow afternoon. It should not surprise anybody if we run our way higher and then dump into the afternoon session or late in the morning tomorrow morning, right? So that two-legged pullback may turn into one of those pop downs and grinders we love so much in our trade room. Now, most important thing though is we go up. We get underneath that moving average, that two-legged pullback. Okay, we're now down around areas of support. We get a bit more than a measured move. The pullback now happens that moving average. Do it again. Look for the same sequence, that failure in a trap pattern. Don't pick the bottom. One try. Two try, trap those bears in. Again, it may keep on going lower. I don't know. All I know is in this scenario, if those bears pull back and try twice, now I got you. Now you can't leave, right? Now you're stuck. Now you're trapped. And now those stops are just begging to get lit up like a Christmas tree here. Stop run gets hit. And again, where's the market want to go? It wants to go back up and take out that high right there, right? Always, bull markets always want to go back and retest the highs on the way up to that high, not at the high. Before we get to that high, please, I want that, you guessed it, that bear trap combination. Take some profit off there at that high. And of course, don't forget too, the size of that breakout leg, right? The size of that breakout leg, and I wish I had more concrete details right now, but you get it, right? The size of that breakout leg, we then pin it down at that leg there, and that will now give us breakout, measured move. If you want to make more money, get better at holding on to your trades longer. Breakout leg, measuring leg, that will help you find those final targets going higher. All right, guys? So now we know as we go higher, it's those bear traps on the way up. It's that two-legged pullback, failure into trap. If I can draw here, in a trap combination, right? Remember too though, right? If they pull back and we start seeing bears struggle, that's your bear trap breakout above the highs. Or if we start pulling back and we start seeing buyers once, buyers twice, crown reversal, or oftentimes it'll pop up, slam back down, grind back over. You know how this one works, right? Short that first test off the high of that range. And again, buying those failures, buying those double bottoms, buying those V bottoms off that low. This is where everybody wants to buy, right? The reality is we may not get there tomorrow. If we do, though, we are ready to capitalize on that. Well, I'm getting excited just thinking about this here for tomorrow. Now, that's the game plan for tomorrow. Don't forget, though, tomorrow morning, 8 o'clock Eastern time, come trade this stuff with us. The easiest way to start making consistent money in these markets is to learn with me, trade along with us every morning in our trade room. As always, I'll put all the important links you guys need tonight, description of the YouTube video. Definitely start first with the free video courses. That will give you a good foundation to start with. And don't forget, if you have questions or trouble getting started, you can always call the office, send me an email, use live chat. I'm going to be here to help out every step of the process. All right, guys? Fantastic day today. It's been a red hot week so far. We got more big trades coming tomorrow. Hope you learned a bunch in the video tonight. Hope you use this knowledge to earn a bunch for tomorrow. And hopefully, I will see you trading with me sometime soon in the morning trade room with all the members here at SOT. In the meantime, be well, be nice to each other out there. And as always, be here next time. Adios, amigos. Bye for now.